Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja, and with me, Shailendra Bhatnagar, as always, our markets editor. Well, Indian markets continue to trade on a flattish note, but where are the pockets of opportunities and what should be your strategy? We'll discuss this. But first, let's do one thing. Let's take a quick market check. So on your screen, Nifty 19,794 odd level. Now, Nifty is trading. Nifty is actually hovering around that 19,800 on mark. Right now, it is trading 5 points lower at 19,798. Nifty Bank, on the other hand, we are seeing some buying there. And if you look at some of the gainers, it's clearly a pharma day today. Cipla, after the clarification of the US warning letter, clearly uptick there on Cipla. 11.99 is the level, 2.5% uptick there. DV's Lab, one of the other pharma counters, up in the trade today. 3770, the level where we are at on this particular counter. Adani Enterprises. So heading in the Adani Hindenburg case is going on, and that's why all the Adani Group stocks are in focus at this point in time. Hindalco, some of the metal counters also, they also continue to do well. Hindalco, one of them, 507 is the level. Axis Bank, NTPC, these are some of the other gainers for you from today's trading session. Now on the flip side, if you see some of the losers, Apollo Hospitals, the top loser for you, 1.6% downtick there. HCL Tech, Wipro. So clearly IT pack is not working today. It's not supporting the market. HCL Tech, Wipro among the top losers. TCS also among one of the top losers. 3462 is the level. And some of the FMCG counters in the top gainers list as well. But let's do one thing. Let's go across to Shell and understand that what Shell is looking at this point in time as far as the markets are concerned. So Shell, it's clearly a pharma day today, not much happening, not much action happening on the last street because of the primary markets, of course.
Well, Tanya, it's more of a life insurance day, and this is something that we had pointed out in early morning trade. Let's look at the three main life insurers from the public sector space, which is Life Insurance Corporation of India, NIACL, as also GIC Ray. Very, very sharp moves coming in. Forget about the broader market. There's nothing happening there as far as the main indices are concerned. Nifty, Bank Nifty doing nothing at all. But all trader interest is now focused on PSU stocks. And if you remember your headline in the morning, you had mentioned that PSUs would get a lot of action on the long side, especially government PSUs. Now, let's look at what volume change is happening as far as these counters are concerned. If you look at the NSE 500 volume list, LIC is up almost 10%, 677. The volume today, Tanya, 1.61 crores is 19 times the 5-day average. NICL is circuit up 20%, 209. 3.45 crore shares have been traded. The volume is 9 times 5-day average. And GIC Ray 311, 18% higher, 862, 8.62 times the average. Sony, just a second, please. Yeah, Sony Patnaik is with us. AVP Derivative Research at JM Financial. Ma'am, very warm welcome to you. We had discussed LIC in particular in the morning. The other two stocks are up 20%. Would you comment on how LIC's chart structure is?
Having me again on the show. So speaking of LIC, of course, from derivative point of view, we have seen quite aggressive long-weighted positions taking place. The charts are depicting a slightly contra picture because, we can see some sort of resistance coming in around 460, 461 at best. Until and unless it's not crossing above this 461 level, one must avoid taking any aggressive positions in this particular stock. It's only above 461 where you can see some short covering taking place till 474, 475 odd levels. On the downside, I can see that there is a good support base of 450. Now, it all depends whether it's able to cross this 450 levels in the next 1 hour or maybe on Tuesday, or it's able to sustain above 461 via a gap up. So it becomes a very crucial level. I think it's better to wait and watch in this particular, parameter as of now.
Okay, absolutely got that. And by the way, LIC, the company has announced that it has lined up 3-4 product launches in the coming months. And the company is also projecting double-digit growth. So that's some positive news coming in from this particular company. But what about the stock picks, Sony? I mean, any top technical bets that you would like to recommend to our viewers for the near term?
Yes, definitely. So I'll start with two picks as of now. The first is again from pharma space because we've seen good momentum and we're seeing majority of the stocks in pharma space picking up very good long beta positions. So the best pick would be from this sector is Granules today because Granules is not only giving you that good aggressive long beta positions, but technically also it is at 52 weeks high. It has given you very good breakout as of today, even in this choppy market. So Granules, I think, is a very good buy from current levels for targets of 420, 425, and keeping a stop loss of 370. So this is the first pick. And the second pick would be it will be from Cummins. Cummins India, we can see it's trying to take that momentum breakout for today. So keeping a stop loss of 1850, you can buy Cummins for targets of 1920, 1930.
Okay. And you remember, Chel, we discussed BHEL in the morning, and it's actually the top gainer, the top mid cap gainer as we speak. And coming to you, Sony, for a quick technical check on BHEL, where is the stock headed in the near term according to you?
Right, definitely. I think BHEL is completely outperforming today from this space, from this particular sector. I can see price volume action giving the breakout. Derivatives data is very supportive of this breakout as well. So there's no chance that there's absolutely no negative chance of any sign of exhaustion coming at current levels. Rather, it's a very impressive breakout. We do see that it can test 165 to 170 levels in absolute near term, perhaps like 2 to 3 months kind of a positional play. And it's completely supporting on a downside. 140 used to be that support area which it held. Now, of course, the support has moved up. So now you can see that 145 to 148 is that immediate basis support range. So I think keeping a stop loss of 145 at best, you can buy this and have targets of 165 to 170.
Right. The one point I wanted to mention on BHEL, Tanya, is that when you look at the annual performance of all F&O stocks, BHEL is amongst the top performers. It's up about 109%. Let me just present some data for you. And if you look at how the capital goods sector has performed, 102%, my apologies. This is a 1 year price performance, 153.10 in front of you. And the beauty of this particular stock is that at 40, 45, much below than what the current price was, it's now trading at somewhere the closest of its 2015 prices, which is somewhere like I think November of 2015. So that's 5 plus 3, an 8 year high on BHL that you see, and a lot of price action accompanied by a very smart spurt in volume is what's happening on BHEL. Let's just do a market check and then again touch base with Sony. We are at 241. Let's see what are the sectoral moves that are coming in. We've already touched upon a couple of stocks. Let's see what the sectors are doing in terms of how the movement is. Sony started with a pharma stock, and at the moment we see the pharma index being the top gainer, fresh record high as far as the prices are concerned, 1% over 15,975. You have gains in the metal space. The small cap index is at a fresh record high, 13,842. The Nifty Bank and the Nifty, of course, doing nothing in terms of sideways action. Sorry, when you look at the charts of HDFC Bank, ICICI Bank, all of them are actually at days high, although there is not much of a percentage gain. Your view, especially on Axis Bank, now 1% higher. They had hosted an event of analysts yesterday and a lot of positive feedback on the fundamental side. What are the charts of Axis Bank telling you?
It's a Shailendra, if I can see the charts of Axis Bank, today's low itself, like around 1,000 should be a very immediate support that I can see. Now, RSI is trying to make a positive divergence based on today's green candle, a positive candle that I can see in Axis Bank. Technically it is indicating that somewhere around 1,020, 1,025 can be tested in near terms. Not a lot of aggressive long winter positions that I can see in this particular space. I think more of short covering. But there's just one positive hindsight to this is that the call writers placed at higher strike prices such as 1,020, 1,030, 1,040 that I can see. They're all in a serious, severe open interest unwinding, which is indicating that the writers are exiting the position. Simultaneously, as the put writers are trying to form their base around 1,000, 1,995 odd levels. So I think all of these data put together, it is indicating that on immediate basis, 1,020-25 is on cards. If it were to sustain above that, it will draw a completely different picture from there, where we can see 1,045 plus levels. That would be a late part to it. So initially, immediately, let's look at for 1,020-25 odd levels as a target.
Right. And the other stock I wanted to check with you was Lupin. You started your conversation with granules. Lupin has been a quiet outperformer in the F&O space, and now the prices that I see are trying to reclaim the May 2017 level. What are the medium-term charts of Lupin telling you, Sony?
It's definitely Lupin from current levels. It is painting a quite a positive picture. If I look at a medium-term chart for this particular stock, it is certainly heading towards 1,400 odd levels. This comes out to be at a medium term, maybe like 6 months or so. You can see it testing 1,400, 1,450 plus levels from current levels. So a monthly and weekly chart that I can see right now. On monthly chart, it has formed a very nice bullish engulfing pattern. So it's quite positive. It is holding. And on immediate basis, of course, the support, on that particular monthly chart, I can see is holding out to be about 1140 to 1120. So that band is very, very strong. And it's based on this particular support band that it has tried to build that bullish engulfing candle pattern. So look for targets of 1,400 plus in the coming few months for Lupin.
Okay, absolutely. That's the verdict coming in on Lupin. But let's discuss some of the other buzzing stocks, Sony, and let's discuss Aditya Birla Fashion. We were discussing this stock in the morning trade as well. And right now, if you see, the stock is in the red, 1.3% uptick there. And 229 is the level where we are at this point in time. What do the charts suggest for this particular counter, Sony?
Right. So if I remember, Tanya, yesterday also, I think we discussed this talk during closing show, and based on yesterday's candle, I had mentioned how that it could test 235 levels. I think today it has almost tested 233 and has been trying to sustain, not sorry, has not been trying to sustain above that level. So I can see there's some minor profit booking coming in. Not much to worry about with this minor booking. I think 225 can be your trailing stop loss from current levels, because it has been the second day of continuous rally that we can see. So placing 225, just look forward. If it should definitely test 240. The moment it's able to sustain above 240, I think that's where the major breakout and the fresh rally can be seen in this particular stock, which of course would be a second part to how the stock plays out. Instantly and immediately, I think 240 should do as your immediate targets.
Okay, and what about TVS Motor? Sony, because we discussed TVS Motors in the morning trade as well. It was actually one of the top picks from our guest only, and the stock is actually in the green. The momentum continues there as well. 1797 is the level where we are at. What are the charts telling you for TVS Motors?
So TVS Motor, of course, continuously it has been in that uptrend. So it has not given you any major signs of exhaustion or any major dip where traders could have re-entered in the stock. For those especially who have actually booked out their profits quite early. Right now, 1820 may act as an immediate support resistance. 1820 could be a little difficult level to cross, because there's a lot of open interest additions taking place at 1820 call, which is indicating that writing is happening. The only thing that can turn out to be a positive side would be that you see a small dip somewhere around 1740, 1730 odd levels. It becomes a good level again to re-enter the stock, because your very strong support is 1700. So your risk reward becomes quite favorable only when you see that dip coming across. Now, if you're not getting that dip, it is rather better to avoid, because the stock has been in a continuous uptrend, and there could be any moment, any day that you see a lot of profit booking coming place. So wait for that dip around 1730. You can place the stop losses around 1710, 1700, re-enter the stock, and from there again you can see levels of 1800, 1820.
Okay, absolutely. So that was TVS Motors for you. But with that, let's take a quick break. But lots more coming up on the other side. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
And welcome back on Market Today. There is a wonderful session happening on Dalal Street today when it comes to cash stocks. I'd like to draw your attention to the entire defense space. Huge action coming in on Hindustan Aeronautics, fresh record high. There is a buzz for orders to the tune of about 1.5 lakh crores coming in for the entire defense space, which is fresh purchases of fighter jets, an aircraft carrier, and some other equipment. This is a media report early morning, and it has enthused stocks across the board. Hindustan Aeronautics at the moment is trading at a record high, 2242, up about 4.5%. You see the entire shipbuilder space in thick of action. Mazgaon Docks 2049, 2.4% higher. We see a very strong traction coming into Cochin Shipyard 1126, 1% higher, and of course Garden Reach Shipbuilders following suit. So within the PSU pack, you have one set of stocks, which is the life insurers, surging very smartly, a 20% circuit on NICAL and GIC Ray, plus a 10% move on LIC. Then you have the entire defense theme coming up, which is HAL, BEL, BDL, then of course the Garden Reach Shipbuilders, Masgaon, as well as Cochin Shipbuilders. The other theme that is building is perhaps the energy space, which will start moving from Tuesday onwards. This is just a movement of liquidity from one part of the market to the other, and you just have to be in tune with market today to find out where the next set of stocks is coming in. BDL, this is Bharat Dynamics Limited, at about 1169, is probably presenting a very nice chart to Soni Patnaik. Your views on Bharat Dynamics, ma'am?
It's BDL undoubtedly is looking quite strong as of today. I think the breakout is quite clear, and one can see that it's definitely heading towards its higher levels of 1210, 1220, almost at range from where it saw some sort of profit booking last time. Definitely, it is heading out towards those levels. So this time it may sustain above that, and the moment it does, you can see a fresh rally up to 1300 odd levels once more. Right. So first, I think immediately looking forward to those targets of 1210, 1220. And if one has to place a stop loss from current levels to buy, if you're buying, so then I think your good levels of stop loss can be placed around 1130. So keeping stop loss of 1130, 1220 remains your higher side upside target.
Okay, and the money is also moving into stocks like MRPL. Mark my words, on Tuesday, you're probably going to see a fairly smart move coming into MRPL, 119.75. You have a volume of about 77 lakhs 65,000 shares at the moment. It is already above the 5-day average. So volume pressure has started building into the counter, and at about 120.35, this is ready for a fresh move. We'll take a technical view on this one a little later, but let's look at what Tanya is checking.
Shell, I think I want to ask Sony about the other auto names. Sony, any other stocks that you would like to recommend for the near term from this auto space, because the space is buzzing, and we did discuss TVS Motors, but there is this Bharat Forge as well among the top gainers. So, any other stocks that you would like to recommend, and a quick technical check on Bharat Forge as well?
Certainly, I think Bharat Forge can be your next best pick from this space, right? So it
Okay.
is giving you signs of very long, good aggressive long multi positions. In fact, it became a good buy from 1085, 1090 odd levels, and I still feel that there's a lot of steam left upside. Somewhere almost easily as 1140 to 1150 range can be seen on immediate basis. It was those levels, that band around 1148 was a high, I suppose. Yes, so 1148, from where it could not sustain above, and it came down all the way to 1000 odd levels, and again it has been bouncing back. So 1040, 1050 is that band where you'll be seeing this stock testing immediately, provided it's able to sustain 1150. I'm so sorry, 1150. Provided it's able to sustain above 1150 this time, you will see the stock giving you a fresh set of rally towards 1200, 1220 odd levels. So I think it's quite poised to take that resistance out this time, and definitely I think it's a good pick right now from current levels, keeping a very strong support around of 1090. So I think that should be your immediate stop loss as well.
Okay, absolutely got that. And we did discuss pharma space, Sony, and you shared your picks as well. But what about Cipla? I mean, the company has clarified now that it will have no commercial impact because of that warning letter. So, where is this stock headed in the near term, according to you?
It's yesterday when we discussed Sipla, I clearly remember asking everyone to wait around, this particular stock to maybe enter in a zone like 1170 to 1160 in that band. And I'm glad that it has, held on to that view correctly and it has bounced back to 1200 levels. Of course, it's more of a trading perspective. On a, a weekly chart, it does look a bit negative if I just put charts on board because yesterday's selling was quite bad, all the way from 1270 odd levels. We saw it falling almost 100 odd rupees. So, this is just a small bounce back that we can see near term. The best case that I can see the bounce back happening is to 1220. Now, 1220 again, we may see some fresh selling pressure coming in once perhaps this entire dust is settled and people have forgotten about it in a maybe 2 to 3 days, and the entire negative news is being forgotten. Maybe after that you can see some better charts forming, better candles forming in the chart. But as of now, the resistance is still quite tight at 1220. It'll find quite a lot of difficulty to cross that, from current levels.
Right. This is how markets are at the moment. And let's take a quick view on the Nifty. Remember, we are headed into an extended weekend. Monday is a holiday. Just flat trade on the index, 8 points lower, 19,794. Nothing much happening on the bank Nifty as well, 176 points higher, 43,755. We are also at the fag end of the November expiry. The fact that the Nifty is up 4.8% and the bank Nifty somewhere like 2.1% is reason enough for a sideways trend. Also, we are headed into a major election week next week. Therefore, markets are consolidating. However, there is a very good chance that at the fag end of next week, which is 27th, 26th, 28th November, when the voting ends, you will see a clear trend on the Nifty and the Bank Nifty emerging. But for that time, we have a very, very strong cash market to support not only volumes but a lot of price action in the space. What else is moving? Because it's the weekend, there is little chance that volume will give you some kind of a move. Let's look at central bank. Days low 4405. Sony, would you have a view on this one?
The banking space, not very best pick as of now. It's quite volatile. Even central bank individually is not giving out any positive picture from a chart perspective. We can clearly see that 45 is holding out to be a resistance which is not able to cross. Until and unless it's not crossing and sustaining above 45, it remains a strict avoid list as of now. And the moment it breaks below 43.7, you can see fresh selling till 41, 40.8, but that's a little far-fetched as of now. Either way, it gives you a picture of caution, utmost caution, and avoid the stock as of now until and unless you don't see it closing above 45.
So that's a view that's coming in on central bank. And the other stock perhaps which is giving an opportunity to buyers could perhaps be KPIT Technologies. 3-4 days of sideways trend. Remember, this is one of the stocks which is in sync with the business that the current market favorite IPO Tata Technologies is in. So a bit of profit booking happening by sensible folks who've made money in KPIT and are now encashing that money, waiting for Tata Technologies IPO to list. Your view, Sony, on the technical charts of KPIT Tech?
Right. So KPIT, it's just an inside candle taking place. What I can see is that on immediate basis, 1420 is holding as some support. If it's able to hold and cross above 1500, 1490, 1500, and then, again, you can see higher levels of 1550 to 1600 band. It's a slightly short term positional play. If it's not able to cross that and rather it breaks that 1420 support, you can see it further falling down to 1375, where lies very crucial support. The moment it breaks 1375, we can see quite major profit booking taking place. So anybody holding on to this from lower levels, it's advisable that you should trail your stop loss around 1420. If you're not able to do that, then at best below that 1375 holds, and wait for 1490 to break on the upside to see any sort of rebouncing back to those 1550 1600 levels.
Yes, right, absolutely. And since Tata Tech is in focus, Sony, because of the bumper subscription and record applicants, I want to discuss Tata Motors with you. Because Tata Motors will raise around 2,300 crore after selling 4.63 crore shares of Tata Tech. So, what do the charts suggest for Tata Motors for the near term?
Tata Motors is a bit, in a pickle, I would say, because it is suggesting that some profit booking can come across. It has seen levels of 685, 690 on a higher side. So there's some sort of profit booking that can be seen because, the put writers have exited the position. So they are in absolute no mood to give any immediate support to Tata Motors. And on top of that, call writers are getting quite aggressive at some higher levels. So the best case scenario of profit booking can be seen up to 650 odd levels. So I think if 650, 655 is a level that you see, that should be the dip one must enter. Right. So it's definitely not a buying as of now. So must avoid, wait for 655, 650 band to be seen. Buy at those levels. You can easily place your stop loss at 643, 640 because that is how the risk reward is going to be favorable back, only back then. So definitely wait for that dip to come in, then enter, make your risk reward more favorable. Because after that it can bounce back and you'll see it though 680 690 levels once more.
Right. This is the action that Sony is pointing at. One more stock which has been and continues to be the market favorite, which is now moving, is the Bombay Stock Exchange. We've seen 3-4 days of profit booking. The counter was, of course, trading at 2471 in the early part of this week, and then corrected all the way to 2558 at the moment at 2159. Since it's overheated, and the fact that we are heading towards an extended weekend, there is no point looking at it in the form of a buy or a sell recommendation. Apart from BSE, you have a very, very strong move coming into Sun Pharma. Remember, this was a stock that hit an all-time high in the early part of this week, and probably at 1196 is also headed a bit of a profit booking as far as market is concerned. We are waiting for Avinash Gorakshakar, Head of Research at Profit Mart Securities, to join us to get a fundamental view on how markets are looking to him. He'll be joining us fairly shortly. Let's also pay attention to other stocks in the pharma space that are moving. Ipca Labs, your view on this one, Sony? How does Ipca Lab looking at 1092?
Right. So Ipca Lab technically is looking quite good from current levels. 1070 is a good support that has held on to even its lows today. So it's definitely poised to take out its resistance of 1100 this time. So 1100 above, you will see it rising up to 1130, 1135. So it's a good bet from current levels because your risk reward becomes favorable right now. So 1090 level you can buy, keep a small stop loss of 1070 and look for targets of 1130, 1140 on the higher side, most likely by next week.
Okay, Mr. Gorakshakar is with us. Avinash, what a pleasure to host you on what is an extended weekend ahead of us. First view, what's happening in government insurers? 20% on NIACL and 20% on GIC Ray. What's your view? And then, of course, we'll discuss LIC. What's prompting this rally?
Shell, my sense is that most of the insurance companies, are doing a very strong kind of business, and I think some smart buying is happening in these counters. Specifically, if you are talking about GIC, RE, or typically, the other insurance companies. In fact, very luckily today, even LIC of India has got some current momentum in the stock, which has been a long underperformer for a long time. So I think stocks like ICICI, Max Healthcare, typically these are companies where I sense that possibly the next couple of quarters are going to be very strong in terms of business growth. Typically, the third and the fourth quarter are pickup quarters. The fourth quarter is typically a very good, strong bumper quarter for most of these insurance companies. So I think markets are now looking at possibly candidates where strong earnings growth could come in on the basis of good volume as well as good top line kind of growth. So I think that is what is happening, and I think this is a trend which has been coming for the last few weeks. There has been some good accumulation in the last week also, and I believe that in this week there has been some good buying by some institutional as well as some PMS kind of funds. So I think this momentum should continue. So I think to that extent I am quite positive on these companies. We could be seeing very strong numbers for quarter 3 and quarter 4. So probably that's the reason the markets are looking at some sort of positivity.
Right. Avinash, the other point I wanted to ask was, of course, it's very difficult to give a view individually on these stocks. NIACL has moved from 140 to 209. We've seen an equally sharp move in GIC Ray, 255 to 310 in a span of 1 week. While these are stretched valuations intra-week, but overall these stocks haven't done anything at all. When you look at what the IPO price of GIC Ray and NICL have been, even LIC, it's trading below its IPO price. Does that also make them attractive?
See, my guess is I think the entire PSU basket shell has attracted a lot of buyers now. There's been a lot of value creation from pockets like railways, defense. So PSU companies have made a lot of money. I mean, these have been the names which have underperformed quite significantly. So I think some amount of value buying or some amount of sentimental buying has come in. But I do agree with your point that within a week the stocks have jumped quite significantly. So I think you need to be a little watchful here. Whatever goes up very fast obviously attracts a lot of profit booking later on. But my sense is that GICRE is a very specialized kind of company. It is into the reinsurance market. I think clearly for after COVID they were impacted badly, but I think operations have picked up pretty smoothly now. So I think we'll have to wait and watch. But anything which goes up so significantly in such a short time, I would be a little cautious. As you rightly mentioned, these stocks definitely have moved up more on sentiment rather than the fundamental part of the story. So probably I would prefer to wait and just give it a pass. We would possibly look at some other pockets of opportunity where the risk reward is definitely better, and obviously where the entry level and the risk reward for the investor after that could actually result in good returns. So these stocks are good, but definitely a little pricey as of now.
Okay, absolutely got that. And some of these defense counter, Mr. Gaurav Chakar, they're also buzzing in trade today. I mean, if you look at HAL, if you look at BDL, Mazagon, these shares are supporting the markets and are trading at all-time high. So, what are your thoughts on these defense counters?
Yeah, I think there's been a lot of buzz in the defense counters largely because in the last 1 week there have been a lot of investor conferences. I think GM had an investor conference. Today ICICI is having the investor conference for many companies, which includes Bharat Dynamics. So I think a lot of fresh news flow is being given out by these companies to analysts and fund managers who are attending these conferences. But I think on a fundamental basis, all these companies are sitting out on a very strong order book, at least for the next 18 to 24 months. So I think markets are happy that despite what elections, throw surprises, for the state elections, at least for the very near term, these companies are fundamentally well positioned. My sense is that, companies like Mazgaon Dock, Cochin Shipyard, or for that reason, HAL, Bharat Dynamics, these are all companies which are being, obviously being boosted by the government's Make in India initiative also. So I think any dip in these stocks could be a good entry point. As of now, I would prefer a hold because valuations have actually been now largely moderate to expensive, and I think markets would now look at what are the kind of earnings triggers for FY25, since almost FY24 the first half has already got completed. So I would prefer a hold, not any aggressive buying as of now, but yes, the long-term trajectory for the defense sector, including for all these stocks, appears definitely attractive.
Okay, absolutely got that. And what about the entire PSU space, Mr. Gaurav Shankar? Because do you think the valuations are attractive when we talk about PSU space and specifically few stocks? If you see BHEL, for instance, the stock is among the top gainers today. And what are your thoughts on PSU space and any stocks that are on your radar?
I think my guess is, within the PSU space, the most underperforming segment is the PSU bank segment, specifically, stocks like State Bank of India, Bank of Baroda, Canara Bank. I think despite very strong balance sheet, good performances in the first half, good management commentaries, I think the banks are not yet performing out full blast. So my sense is that, this could be a pocket of opportunity for investor who could get in and probably wait for the next 6 to 12 months because with a credit growth of almost 10-12%, corporate capex also pretty strong, retail demand continuing to be. My sense is that banking as a sector will obviously continue to do well. The other sectors like railways, defense, or typically, the utility companies are definitely, I think, doing well, but they have been priced quite aggressively. In fact, in the last 6 to 12 months, a lot of value creation has happened on all the railway ancillary stocks, the defense stocks. So here I would believe that it's better to go a little cautious because stocks like Mazgaon Dock have moved up from almost 200 rupees to almost 2000 rupees in the last 2 years. The same applies for companies like HAL or for that reason Cochin Shipyard. So I think a lot of price upside has already happened. Now, if one were to take a position in these companies, you have to look at what is the kind of earnings trajectory for the next 12 to 18 months because clearly the visibility seems to be strong, but valuations are not cheap. So I think I would prefer to prefer a hold. Obviously, if the state election numbers are not as per the market expectations, you could probably find a small kind of market dip. In that dip, possibly one could accumulate these stocks.
Right. Avinash, I was just coming to the elections part, but I'd just like to make one comment on the defense space. Of course, we've seen stocks appreciate like Mazgaon and Hindustan Aeronautics to a multi-bagger kind of a proportion over the last 7 months or so in Mazgaon and over the last 5-7 years on Hindustan Aeronautics. The fact is that a lot of these movements are so exacerbated because the liquidity in the counters is so less. This doesn't mean that these are, even if expensive, meant to exit at these levels. Just hold them if you have on your portfolio. Of course, giving a buy recommendation at this level requires a heart strength which I don't have, and Avinash has very rightly said that these are not buy levels to have at, but probably 1 year down the line you just might look at these prices and think कि अगर उस दिन ले लिया होता तो कितना बढ़िया रहता. Markets are also about disappointments in life, and probably the defense space over the next 1 year or so will make you feel disappointed that these were the prices in November of 2023, and Avinash and Shail were discussing about them, telling us not to buy these levels. Nevertheless, Avinash bhai, how do you think are markets positioned ahead of the election results? December 2, December 3. This is when the exit polls come, this is when the results are announced, and Nifty is sideways all through past 5 sessions. How does the next week look to you?
No, I think, Shail, there are two possibilities the market is discounting. One is, there are broad expectations that BJP would lose Madhya Pradesh and win Rajasthan. So I think this news flow has already been, partly discounted in the market. But if at all BJP loses Rajasthan and Madhya Pradesh, both these key states, then I think it's going to be a big negative sentimental surprise. Although, the state elections may not have a big impact on the central elections, which we are going to have them next year. I think any negative surprise of having a defeat in 2 key states for the BJP would obviously be a little difficult to digest because the markets are expecting that obviously Rajasthan could come to BJP, MP could go to Congress. So I think, the broadly the expectation is that if there are no major negative surprises, the markets would actually roll on. Liquidity, from the domestic, SIP funds is pretty solid. So I think markets would obviously continue to operate on a stock specific basis. But this election is going to be very important, specifically these key states. If they lose both the elections, the states, then I think you're going to see a big sell off, which I think the markets would obviously appreciate that, some amount of, good quality buying could emerge. Obviously, analysts like us have not been able to buy all the stocks at the right level because the markets have run up also very fast. So I think it's going to be a very volatile period now over the next, say, 3 to 6 months, because as elections come nearer, I think markets would obviously run on expectations, and obviously what surprises and disappointments come in, that would decide the market, trend going forward.
Okay, absolutely got that. And Mr. Gorakshaka, coming to you for Adani Group stocks, because this entire group is actually in focus today because of the hearing that is going on. And the SEBI has said that it is not seeking an extension of time. So, any stocks on your radar from this Adani Group?
Yeah, I think my guess is that unless judgment comes out, it's very difficult to pinpoint what could be the near-term trajectory of these companies. We have seen a big correction, ever since the Edinburgh issue happened, and after that there has been some recovery. But I think clearly, an investor who's got a high risk appetite could obviously look at, companies like Adani Ports, Ambuja Cements. These are great businesses, generate a lot of cash flow, and obviously if you leave out the sentimental factor, then I think their balance sheets are pretty solid. But I think clearly for a investor who's a little cautious and who would prefer to wait and watch, I think it's better to wait for this report to come out and understand what are the implications, because this report has been delayed for a very long time. If at all the final results does not come out in favor of the Adanis, then I think you could possibly find some negative surprises here. And eventually, I think these companies, one thing is very clear, that only once the central election is over by next year, we have a new government. After that, only there could be some sort of a significant re-rating. Till that time, this group is embroiled in a lot of controversies, and that's why the market is not focusing on the earnings part, and it is only sentiment which is taking over. So I would prefer maybe Adani Port and Ambuja Cements. If somebody has the risk appetite, he could obviously accumulate even at current levels. But again, from a longer term perspective, in the short term, the volatility could be quite significant.
Okay, and what about your top picks, Avinash? Because I think we forgot to ask you about the top bets, and maybe for the near term or let's say medium term.
Yeah, I think we continue to like both the small cap space as well as the large cap space. In the large cap, we continue to like Tata Motors. Basically, see, I would be frank enough to admit that Tata Motors has of course run up sharply in the short term, but in the longer term, I think all the earnings drivers now seem to be coming into full flow. JLR has started turning around very well. They've started generating a good amount of free cash flow here. Most importantly, the domestic CV and the passenger car business is also doing very well. Electric vehicle, business, they already have a 40% market share in the domestic market. Plus, the Tata Technologies issues is going to give them a short-term boost, because whatever money comes from the issue will actually go to Tata Motors, because it is the controlling entity for Tata Technologies. So I think net, I think we could see a profit of almost 16 to 17,000 crores this year compared to a loss last year. And I think this momentum will continue. So Tata Motors, you could expect levels of 750, 775 over the next, say, 12, 15 months. And the other company which we are very positive, in the real estate space is Anant Raj. It's a small company based in Gurgaon, and which has a very interesting business model. We believe that, data centers is now going to be the near-term driver for this company. They have a capacity of 300 megawatt, and I think clearly in the next 2 years, the data center business will be as big as the real estate business. So I think it's a good value bet. Somebody who's got a 12 to 15 month kind of time horizon can definitely bet on this company, because the real estate piece is the cash cow and the data center business is an emerging business. So we are looking at a target price of around 320, 330 over the next 12 to 15 months.
Okay, got that. So Tata Motors and Anant Raj, these are the two picks that are coming in. Keep an eye out on these two bets. But now it's time for us to take a quick short break, but lots more coming up on the other side. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
The dying moments of trade left in Friday's session. We are at 321. The markets closed for an extended weekend. Monday is a holiday. Let's do a price check on the entire space. Nifty flat as always. There is a magnet around 19,800 which brings the index back. For the last 5 days we've seen this, and this also is making the 19,800 level an even more important and strong support for bulls. Bank Nifty 200 points higher, 43,790. You have the IT index down 1%, 310 points lower, 32,061. Now, what is really ticking in trade and what will move on Tuesday? One of the sectors is the power space. Adani Power has reclaimed the 400 rupee level. This is something interesting. Adani Power at 400 rupee levels is the highest since 425. This is what we saw on August of 2022, and of course then the very sharp sell-off that came in. So very strong momentum coming in on Adani Power. And this is not the lone stock that is rising. NTPC, which is India's largest power producer and also in the power space, is at 254. Not the day's high, but definitely a move that is fairly well seen. Apart from that, you have lots of moves coming in on the Bombay Stock Exchange and Lupin. Remember, another reason for Adani Power and Adani Enterprises to react is that the Supreme Court is hearing the Adani Hindenburg case in its extended session today. Let's see what the decision is. We obviously don't know, but the stocks are ticking. Adani Enterprises for you is at 2236. Decent block deals happening on this one as well. The entire insurance space is aflame, and I'd like to see LIC Housing Finance. How is it? I'm sorry, LIC, Life Corporation of India. How is it moving? I see a lot of yes, 678. Just let me check the price. 682 actually. This is the day's high, and the volume on this one is now close to 2 crore shares. I don't remember seeing this kind of a volume. Yes, it was on the first day of listing in May of 2022. While you won't comment, Avinash, on the stock price, but simply volume. This is what we saw on the first day of listing for LIC India. In fact, more than that, but this is the second highest. What does that foretell about where the stock could move?
I think, Shell, clearly, the volume is clearly showing that there's a large interest from the market, and hopefully, if a lot of institutional investors now get in, because what could actually move the needle is any significant buying from the fund or from the FIs. Clearly, the fair value of the stock could be anywhere between 750 to 800. But I think some good amount of buying by large funds could obviously mean that the market is convinced, the bigger investors are convinced that the story at LIC is going to now play out. For a very long time, as you rightly mentioned, the stock has underperformed right from the time it got listed. So I think this is definitely good news. And of course, if it is supported by stronger performances in terms of the revenue, in terms of the profit, then I think that could obviously add a little more muscle to the stock price re-rating. So I think it's an interesting development, but I think we'll have to wait and watch for the third and the fourth quarter numbers. But volumes definitely indicate that there's a lot of market interest, specifically from the larger investors who are now making a close look at the counter, considering that most of the negatives are built into the price.
Okay, some of the other stocks that I want to mark in trade, it's already 325, so there's no point taking technical calls. Let's look at how NIACL and GREC are now moving. Okay, LIC, like I said, the volume is 23 times 5-day average. 1.87 crore shares have changed hands. This is the highest volume since the counter got listed. Listing day volume and today's volume is now the second highest. 10% higher, 678. GIC Ray, now a bit of profit booking happening, 15.9% higher, 305. Remember, 305 is the highest since November 2019. So it's a 2-year high on GIC Ray, 10x volumes, 2.4 crore shares. NIACL 209, 20% circuit, 9.5 times volume, 3.4 crore shares traded, and NIACL is trading at its highest level since March 2019. This is how the top sector performance has been today. Tanya, what are you looking at?
Shell, I want to discuss some of the metal stock with Avinash because some of these counters are buzzing in today's trading session. It's of course, cyclical sector, Avinash. But what are your thoughts on any stocks that you like from this particular sector? Avinash, can you hear us?
I think Avinash can't be heard at the moment. Let's look at some stocks that are doing well. Apart from within the Adani group, so you have Adani Power, Adani Enterprises. One stock that's also started to roll in the green is Adani Port. At 804, the stock has taken support on its 100-day moving average, and the most recent high was 880. So fairly strong moves coming as the hearing control continues in the Supreme Court on the Adani Hindenburg case. Adani Enterprises again. The reason why I mark these stocks repeatedly is because you just might see some kind of a view coming in from the courts, and tomorrow is a holiday. These stocks may react on Tuesday. Adani Enterprises 2446, the most recent high that we have seen is 2716, which was hit in August of 23. So this is how the stocks have moved. We are still 2 minutes away from close. The Nifty is flat at about 19,790. The Bank Nifty 168 points higher, 43,750. Tanya, what are you watching?
Well, I think it's a pharma day today, so that's why I was looking at all these pharma counters, and I think Avinash is back with us, right? Avinash, can you hear us?
I can hear.
Okay, absolutely. So Avinash, we were discussing, some of these buzzing spaces. So before we end this show, any topics that you would like to recommend from the mid-cap space? Avinash, can you hear us?
Yeah, I can hear you.
Yeah, so I was saying any top picks that you would like to recommend from the mid-cap space.
I think mid-cap space, on the auto component side, we like companies like Jamna Auto, which is one of the largest chassis producers of the commercial vehicle sector. They have players like Ashok Leyland, Tata Motors, Volvo as their key customers. And I think on the export side also the company has been doing very well. So here I think we are looking at a 20 to 25% earnings growth over the next 12 to 18 months and a fair value of roughly about 150 to 155. So I think this could be an interesting bet because the stock has also not outperformed significantly like the other auto component majors. And the other company which is very interesting is basically from the large cap space. Of course, this is not a small cap. We recently visited Cummins, and we believe that Cummins has got great amount of earnings growth potential over the next 6 to 12 months. Not only the export market, but even the domestic market has been doing extremely well for them. My sense is that over the next say 6 months, you're going to see a lot of new products, especially relating to hydrogen, relating to new product technologies launched by Cummins India. And obviously, the current order book is pretty solid. The management is quite hopeful that the next 6 to 12 months are quite promising. So here, a fair value of roughly 23 to 2400 is possible. So I think one large cap from the capital goods space and one auto component stock is something which you would advise investors to actually buy on any decline.
Okay, Shail, absolutely. I think with that, we should wrap up this edition of Market Today. But before we wrap up, Shail, anything that you would like to say? Because I think we are heading, into a extended weekend. And I remember you talking about Nifty ETF and how it has worked really well for all the investors. So, jate jate, your last thoughts, your last words before this extended weekend.
जाते जाते तो I am planning for a Friday evening, which is going to be very, very exciting, Tanya. But thank you for reminding on that ETF trade, and I'm very happy that Avinash is here. Let's just take this discussion for a minute. Avinash, somewhere at 18,800, which was on 26th of October, we had decided to, talk about two ETFs, which is the SBI Nifty 50 ETF. I distinctly remember it was at about 193, 194 rupees, and the bank Bs from Nippon AMC. Which was somewhere I think 415 or 420. I don't remember that price correctly, and we recommended that over the next 10 odd sessions, just break your whatever investment you want to make into 10 equal parts and buy till the markets either move up or move down. We were very fortunate that you've had 1,000-point rally on the Nifty from then on, and it's worked very wonderfully. So people unnecessarily trade in Nifty futures and options and make losses. If you had done the same trade in the ETF, you would have made near riskless money. Avinash.
I think, Shell, you rightly said it because, the volatility also on the Bank Nifty futures options is extremely high. And I think this strategy, at least, the investors should follow because this is a very good positional kind of strategy which helps you, park your money in an asset which is less volatile, at the same time gives you very good returns. And previous data points have actually proven that point. So I think, even going forward, Shell, this would be definitely be a good asset class to actually park money, considering the safety and the volatility part is going to be on your side. So my sense is that even now going forward, the next 6 months, according to me, are going to be even more volatile. So, people who trade in Nifty options or futures or Bank Nifty are going to find the movement extremely volatile. And this volatility is going to start from 3rd December. I think probably from early January, you'll see the volatility increasing once the market starts, discounting the election, kind of campaign plus the final results. So I think this would be a very safe strategy for investors who could possibly want to park their money in less volatile instruments and obviously, keep their safety of capital also intact.
Right. Avinash, thank you so much for your wonderful picks in the mid cap and the small cap space. We leave this discussion for some other better time. But for now, thank you from our side for joining us, and to all our viewers, have a very nice weekend. Just enjoy the party, and thank you for watching us. Stay glued to BTTV for all your financial news needs. Thank you.
Okay, so with that, we will wrap up this edition of Market Today. Have a great weekend, and let's see how the action pans out going forward. But with that, it's time for us to wrap up. But stay tuned for all the other market updates.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.